Welcome back, cool cats. Here in a second, we're going to get into my thoughts on why the market keeps going up, even though all the technicals seem to indicate that it should go down. But first, let's take a look at some patterns that are setting up on SPY and QQQ. I'm finding more and more that I kind of like QQQ because it seems to respect the technicals. We had this rising wedge pattern, and this right here in orange was the pattern target. Look at this. This hit main resistance. It came down, and look at this line from left to right. It hit that pattern target perfectly. Now, I suspect a lot of this has to do with the weightings of the different ETFs, QQQ being very tech heavy. It doesn't have a lot of the other names that SPY has to kind of keep it propped up. But right now, we've got a symmetrical triangle pattern that is playing out, and you can see that this is basically indicating this is ready to break out tomorrow. Now, what's really interesting about this is that this is basically targeting very key levels. So if this goes to the downside, this is targeting around 483, which is in alignment with this long-standing ascending support line. But if it breaks to the upside, this is targeting around 505, which basically is right at previous all-time highs. And so that it's perfectly clear what all these different lines are, the different support and resistance levels. We had a long-standing resistance line here in orange, long-standing support line in orange. We have the more recent yellow lines that form this rising wedge. And then, of course, more recently, but it seems pretty significant, you have this resistance line here in purple. Every time it's hit it, it's rejected pretty sharply. And what's really, really interesting about this, I just noticed this recently, is notice where the apex of this rising wedge pattern is. Assuming that this breaks out, this could be breaking out sometime right before or right after election day. If this decides to break to the downside on or around election day, we could be looking at a breakdown target of somewhere around 451, or if we, drag it over just a little bit further, maybe somewhere around like 453, but I mean, it's a very tight range. And I'm keeping in mind, for QQQ, we haven't broken this previous all-time high yet, and we still have very bearish structure above where we're currently sitting. It obviously doesn't mean we can't break through it and go much higher, but I'm leaning bearish on this one. Now, switching over to SPY, if you've been following my channel for a while, you know what all these different lines mean. If you don't, I would encourage you to go back and check out previous videos because we're always giving very clear and concise patterns and targets, as well as key levels. So the symmetrical triangle pattern that we saw in QQQ, we're seeing kind of a similar coiling pattern on SPY here, although it looks like it's targeting a breakout or a breakdown somewhere either tomorrow or the day after. Now, of course, I know everybody's saying, well, Derpy, what are the pattern targets? So to the downside, if we break down, we're looking at a pattern target of around 579, which would be confluent with this long-standing support line. Honestly, if we hit that, it potentially could get a very strong bounce. If we break to the upside, however, the upside target is somewhere around 595. However, we would have to get past this main resistance line. And if you're like, well, what resistance line is that? This is the resistance lines and the previous support lines of this big rising wedge pattern. We can see now the previous resistance has actually crossed over the previous support line, and it could potentially act as resistance now. In fact, I wouldn't be surprised if we got up to this and got a sharp rejection, even if it was followed by a further move up. And the ADD is confirming everything that we're seeing on SPY and QQQ on the overall market. We've got this coiling pattern right now on the ADD. Every time we get up here, it rejects. We get down here, it bounces. So I'm very curious to see the overall market as a whole is bouncing around in a tight range. So once it actually breaks out in one direction, it's going to be pretty explosive. Just like what I covered before with this falling wedge pattern on the ADD, we finally get this big breakout after we had kind of like almost like a double bottom on the overall market, had this huge breakout on the 10th. Now, just as I frequently do, I shared on the YouTube community tab that the dollar looks like it was fixing to break out at the same time that TLT looked like it was it was a good spot to take profits probably, and then possibly re-enter on a pullback. Now, if you haven't subscribed and tapped that notification bell, please make sure that you do because you don't want to miss these updates. So following up on the patterns that I shared, when we look at Dixie, the dollar strength index, we did in fact have this breakout like the RSI was indicating. We had a breakout. We briefly broke above this main key level and then rejected sharply off of it. And you can see that the dollar was kind of trading in between this. It's kind of, I call it an ugly channel. It's not exactly a parallel channel, but it actually broke below this resistance. And if you zoom in just a little bit, you can actually see it even retested this previous support, now seemingly treating it as resistance. And we have this pattern target here in blue before from this big falling wedge pattern that we covered. This was the pattern target. It was around 103.30. We got up to it. We rejected a little bit and kept pushing higher, but I have to wonder if the dollar is not going to continue to pull back a little bit more. But when we look at this is on the 4-hour time frame, the RSI is already back to almost oversold condition on the 4-hour. Although when we switch over to the daily time frame, we can see that the RSI is still definitely in overbought condition. I wouldn't be surprised to see the dollar come back to retest somewhere around like 102.50, give or take. Possibly even coming back down to the Ichimoku baseline, somewhere around 102 even, which also has confluence with that. That's a very key psychological level. And I wouldn't be surprised as this pulls back if treasuries don't rise. But let's get into those. So the day that I shared that post about TLT, I said that this looked like a really good spot to take profits. I want to show you what I was seeing. We were right here at the 100-day simple moving average. We were just under this daily Ichimoku cloud resistance, which often, especially on the first touch, acts as a strong resistance level. There's also this key level right here, right around 95.75. And to add even more confluence to this being a first touch bounce off of support followed by a pullback, look at what's happened every time that it's touched that main yellow line, that main support line. We've hit or gotten close, bounced, hit, bounced, hit, bounced. There's only a few times where we got what they call an island reversal, where it hit it one time and then bounced. So it was very likely that when we touched this here, we were probably just going to get a good multi-day relief rally and then another pullback. And ultimately, I think once we get back to this main support line again, it's going to determine which direction the long-term bonds are going to go. So looking at TLT, you got to keep in mind there can be technical catalysts and there can also be fundamental catalysts. On the economic and the earnings calendar for this week, I don't see anything really market moving for bonds, at least, that would break out tomorrow. But look what we got here. Looks like a symmetrical triangle pattern on TLT. TLT was following a very well-defined ascending trend line here. And once we got the break of that, in my mind, that was confirmation that the uptrend, the short-term uptrend had been broken. And so right now, TLT is very, very close to very key support levels. There is this descending channel that it was trading in before. So we're near that support line. We're near this key level around 93, as well as this long-standing support line. So one would think that this would be more likely to break to the upside. Now look at this target. It's interesting. If this breaks to the upside, it's targeting basically the upper resistance line of the descending channel, somewhere around 95.80 to 96. If it breaks to the downside, however, it would be breaking through all of these main support levels, targeting somewhere around $91. Now, it's probably too early to say, but we're looking at the RSI pattern here. There is the potential that this is setting up an inverted head and shoulders pattern on the daily time frame, but we would have to get this pullback here and a bounce up to confirm. Now, I mentioned earlier, I've got a hypothesis as to why the market keeps going up and bonds are going down. People pile it into bonds because they thought it was a surefire way to make money the second that the Fed cut rates. But instead, we've seen the exact opposite. Since the Fed cut rates back on September 18th, we've done basically nothing but sell off. I mean, as well defined by this descending channel. So if you were one of the investors that got caught off guard, let me explain to you what I think is going on. Essentially, the inflation trade is on. When you cut short-term interest rates, which is what the Fed controls, you're going to expect to see short-term interest rates to go down. However, the Fed does not control the long end of the yield curve, aka 20-plus year bonds. So the market is going to expect a much higher yield further into the future to make up for the rate of inflation that they're expecting. It's essentially fiscal dominance, where our government is just printing and or borrowing so much money all at once. There's no way that we're not going to see inflation. And gold, which I'm using GLD as the proxy for right now, you can see it had this previous supply zone that it was really trying to break out of for many, many, many weeks. Could not get above this. Finally broke out. It went through a bit of a range here again, somewhere between about 210 to roughly 226, and then finally broke out to all-time highs. So this is like 251 on this chart, but you know, gold is around, it's a little over 2,700 right now. Now, I would not be surprised to see gold try to pull back and retest this previous resistance somewhere around 227, maybe around 230. However, and this is something I really want you to pay attention to, look at the RSI on the monthly time frame. It's ugly, but we had an inverted head and shoulders pattern. These are the things that we look for to position ourselves ahead of time to catch these big breakouts. And if we actually take a measured move here from the neckline, we can see that gold has already surpassed the expected move from that pattern. So could it pull back? Yeah, I definitely think it could. And for those who are really interested in getting back in, you know, this range right here could potentially be a great range to go long. More and more as the US government debases its currency, and you could say the same of many other countries, including China, we could see the price of gold continue to break even like above 3,000. And we can even see that Bitcoin, which is definitely considered a risk on asset, you know, it's still getting closer and closer to previous all-time highs. But I have a very strong feeling that we're playing a very dangerous game of musical chairs. And once the music stops, AKA once fiscal dominance is no longer enough to just prop up the economy indefinitely, the market's going to tank. So taking a look at the VIX on the daily time frame, look what we had here. On the RSI, we had a higher high form. This is called a hidden bearish divergence. When you have a higher high, it means that the market's getting a little bit overheated and then it's going to get a pullback. Right here, we had basically an equal high. So we got the pullback, but you know what's typically followed by hidden bearish divergence? Bullish divergence. And considering that we're looking at the chart of the VIX, the fear index, I have to wonder if we're not about to get a big breakout in fear. It would make sense going into election day and possibly a few days afterwards, maybe even a few weeks or a few months. And if you needed more of a reason to be bearish, look at this pattern on the VIX. For those who are paying attention, tell me what chart pattern this is down in the comments section below. And look where it's targeting. Now, I'm going to skip the economic calendar of this video, but you're welcome to check over earnings.com. Their economic calendar is fantastic. Let's get straight into Moomoo's earnings calendar. The real big names this week are going to be up on Tuesday. We've got Raytheon, Lockheed Martin, and Verizon up on Tuesday. Then on Wednesday, really big name, we've got Tesla. After the bell, we got Coca-Cola, T-Mobile. And then up on Thursday, of course, we've got UPS. And just as a reminder, if you found this video and all the content in it to be useful, if I've earned it, please like, share, and subscribe. And nothing that I've shared should ever be considered financial advice. I want to wish everybody the best of luck this week. God bless. And let's finish this up with this week's trading rule to live by.